3 years. That's how long it took me. I spent all that time trying to figure it out the hard way, and it cost me a lot of money throughout the way. And now I'm giving away my 9 rules that I wish I knew from the start because I started out like most traders with those shitty discords and the shitty signal groups and the shitty mentors. All right, here's my year 1 to year 3 and onward. So year 1, I felt completely lost, right? I'd known my strategy, but I had no idea what I was really doing. I wasn't journaling. I wasn't really taking it seriously, and so I pretty much just wasted my first year. Then year 2, I started taking it a little bit more seriously. I was actually journaling. I knew my playbook and my trading plan. I executed it properly. I was back testing. I was live trading, demo trading, all those kind of things I need to do to actually start seeing progression. And then year 3, I actually finally felt confidence in my system. So um, I've known that my journal is correct. I've got good data to back it up, and I've got the discipline and the consistency to continue moving forwards. All right, number 1, the get rich quick scheme. Day trading and trading in general, it's sold as fast money. It's sold as trying to get rich quick and trying to make money pretty much as soon as you start, right? Like in the first month, 2 month, like just copy my signals, free signals, this, that, like you get nowhere. And it's not right. Trading is a months to years long thing, okay? Most blow their accounts chasing shortcuts within the first 6 months. So they think that joining signal groups and those weird, sketchy discords um, is the right thing to do. When in reality, that's you're getting nowhere doing that, and it's not the right thing to do. Okay, try and take shortcuts for something that um, you need to take the long run in. And then trading is a skill business, and skills take time to build. Okay, trading, like anything, it's a business. If you want to make money, it's a business. So you have to treat it like a business. You have to build the skills um, to make your business profitable, right? And so you've got to build those skills. So getting rich quick and skipping and trying to go through shortcuts only leads one way, really, and that's for nothing, to explosion. You never get anywhere thinking like that. Actual skill building, you'll get to a point where you're actually funded, you're profitable, you're trading on your 5 figure personal account, whatever it might be. But skill building here is the most important thing. So thinking that this get rich quick scheme, it doesn't exist, okay? In trading, it does not exist. All right, second rule is starting small, okay? So starting in a small size keeps you in the game while you learn. You're not spending like 20,000 or 30,000 of your savings to start trading to actually learn with, right? That's the totally wrong way to do it. You cannot learn from a blown account and heaps of pressure. If you've put on all your life savings for that to start trading live and you've never done it before, you're going to put so much pressure on yourself. You're going to be anxious that you're going to lose your money. You're going to be greedy and you're going to want to like maximize returns as quick as you can. You're going to risk too much. You're not actually doing the things you need to be doing, which is building the skills, right? And that's why starting small is important. Start off with $1,000, $2,000, something that you don't really care if you lose, but it's enough amount for it to be a um, meaningful loss and a meaningful win, right? It's not something where it's devastating if you lose it, but it also does have some substance to it, okay? Surviving long enough to get good is the actual goal, okay? So that's the whole point. Surviving long enough, okay? So starting too big, starting at this point here, where you're just anxious, nervous, or greedy, or there's like the ultimate euphoric stage here, and then you realize you go through overtrading and you end up blowing your account or blowing your funded or whatever it might be, right? If you're starting small and consistent, you're building the good habits and you're building the good skills, right? So yes, there are ups and downs, but it's a lot more of a consistent learning curve rather than trying to start too big, wasting your money and being nervous with your money, okay? So start off small. Number 3, price action before profits, okay? So you need to actually understand why price moves before you can trade it. It's a good idea, like it's all good and well to know what a strategy is and how it works, but if you don't even understand why price moves or liquidity, all those kind of things, then you're going to be left you're going to be left behind. You're not going to know what to actually do. It's like jumping into a business model where you have no idea what you're doing and expect to make money from it. Like you have to know your industry, your competitors, your suppliers, your neighbors, whatever it is in business, you need to know those things, right? So it's the exact same in trading. If you don't understand it, then how can you expect to actually make money from it, right? How do you actually expect to profit from it? Most traders, they skip this step and they go straight to indicators or signals. They realize that it is kind of hard to learn your own strategy, and it's hard to understand how liquidity works and price action works and market structure and all that kind of stuff. So they jump straight to indicators and those buy and sell indicators, right? Where it just tells you to buy, sell, buy. Like those are total bullshit. Those have never worked. If they worked, everyone would use them, right? No foundation means no consistency ever. If you don't have the foundation, knowing how price works and price action, all that kind of stuff, if this doesn't work, then this structure won't work, this strategy won't work, and then ultimately that profit, that won't work either, okay? So you need to understand that price action and that foundation is much needed before profits are. Number 4, stop strategy hopping. Every strategy works sometimes, okay? Every strategy works. Anyone can pick up a strategy off YouTube and trade it and become successful from it, okay? Literally any strategy, right? But that is not proof that it is the holy grail. It's not the proof that it's the best strategy in the world or the strategy that'll work most for you, okay? Hopping around resets your learning curve every single time, okay? So it's this part here. One strategy mastered over time is always better than 10 half-learned ones or 10 half-assed strategies or 5 half-assed strategies, okay? Mastering that one strategy will get you so much further than trying to balance 3 different strategies where you're 50% good at it or you're 60% good at it, right? The strategy hopper, they just go into this infinite circle and they get nowhere, okay? They go from the start, they start at the start, they get somewhere a little bit further, they realize it's getting too hard, and then they just go and they find another strategy, right? That's not how it works. You're never going to get anywhere doing that. Meanwhile, mastering one strategy, you start from the start, you see some progress, it's not the best, you stagnate a bit, but then you stick through it, and lo and behold, you're actually good at the strategy, and the strategy is profitable for you, right? You've got a good data set, and you're trading it profitably, and you're making money through fundeds or your personal account or whatever. So sticking to one strategy and mastering it is 1,000 times better than strategy hopping and trying to find that holy grail, right? So just simply put, stop strategy hopping. Number 5, overtrading is literally trading death, okay? More trades, it does not equal more profits, okay? It means more exposure to your own bias. So you are almost convincing yourself that trades that are not inside your plan are inside your plan, right? And you end up taking more trades which are not in your plan, and that completely stuffs up your strategy in general. I was in this stage where this was my equity curve. I was doing well, and I was doing really well to the point where I started getting a bit greedy and I wanted to start over trading. And so instead of taking like 10 to 20 trades per month, I would be taking like almost like 30 plus. It was cooked. Like it was double what I was doing. So instead of my equity curve looking like this, my equity curve started looking like this, right? Like I was over trading and I was losing money, okay? Like it was more like this, right? Like I wasn't getting anywhere and I was pretty much just losing money from it. I was trying so hard to just force trades that weren't a part of my plan into my plan, and ultimately got the bad end of it, right? The problem is like the two biggest issues, like where it comes from, is boredom and frustration, right? So if you're bored and you feel like you need to be productive, you need to be doing things, which is a normal thing in trading, because you always feel like you need to be productive, then you start taking too many trades, and then you're getting to a point where like you were fine here, but you started being too bored and or too cocky, and you're over trading, and you've just worsened your equity curve, right? And then frustration as well. So taking a loss, right? So from here, this is fine. You can take a fair few losses in a row, right? But you just got to wait for your edge to play out, and you'll be back on positives for your equity curve. But if you're sort of pissed off when you're frustrated, you want to take even more trades, you realize that you're just taking more trades that are outside of your plan, you're not sticking to your plan, and your trading is getting worse, all right? The best traders, they're waiting, they're not watching, okay? Trades will always come to you. Don't worry about it. You don't have to overtrade. If it's not a part of your plan, then don't trade it, okay? So overtrading, if you want to blow up your account, then start overtrading. but highly recommend you don't overtrade. All right, number 6 is no trade is a trade, okay? This is actually taking a position. No trading is taking a position, okay? So not being in a trade is a valid trade decision, okay? If there's nothing on the charts, then that fits your plan, then why would you even take a trade? It's not a trade you should be taking. You just go and you wait for the next one, all right? Holding cash, it preserves capital and mental clarity. You're not forcing yourself to take shitty trades. It's helping with your mental and psychological side of trading, but it also helps just to preserve capital. Preserve capital for setups that actually are a part of your plan, okay? So hold that cash if there is no trade in the markets. The market, it'll always give you another setup. It's literally guaranteed. Like, it's not going anywhere, right? There's $7 trillion of this traded a day. It's not going anywhere, okay? Protect your ability to take it, okay? I always think of it as like you're sitting at a bus stop. This is me right here. I'm at the bus stop and I've missed this bus, okay? This bus is driven past me and I've missed it, okay? The best thing about it is once this bus is gone, there'll always be another bus, right? Maybe it's 5 minutes later, maybe it's 10 minutes later, maybe it's 20 minutes later, but there'll always be another bus for me to catch on to, right? It's the exact same in trading. If you miss a trade or if you don't take a trade, there'll always be another trade waiting for you. That might be in one day. It could be tomorrow. It could be 1 week. You could go surprisingly 2 weeks without a trade, right? But you just got to know that there'll always be a trade that is coming, like that you can take, right? So taking no trade is a position. Taking no trade is a trade. Number 7, the trade journal edge, okay? The journal, a journal is the only way to see your actual patterns, not the ones that you think you have, okay? If you're not even recording your trades and what your trades look like and the entries that you're taking, then how are you supposed to improve, right? How are you supposed to know where you're going wrong? How are you supposed to know what you're doing well, okay? So this journal, this trading journal is like an additional edge in your trading, okay? I mean, it is the edge in trading. If you don't have it, you have no edge, you have no data, you have no statistics, you have nowhere to look for. You look back as a reference to, you know what I mean? So without data, you are just totally guessing. With data, you are improving. Okay. You know what your losers look like. You know what your winners look like. You can start seeing patterns. You've got pattern recognition. You can actually get somewhere when you're trading with a journal. Okay. Review it weekly or monthly. I review it monthly. It's just easier for me. See what worked, what triggered you, what made you like emotions, and what you avoided, like um, and why you've maybe avoided it. Those kind of things, um, you do like it's beneficial to have in your journal. Okay, so you can always look back at it, and if you are going through a losing period, you can see, oh, now I know why, because I felt emotion X and I felt frustrated or whatever it might be, and I ended up taking 30 trades, but then I look back at my more profitable months, and it says that um, those profitable months I was taking 10 to 20 trades per month. Okay, but now I can see I've taken 30 or 40 and I'm unprofitable, okay? So I found the error and I've made an improvement on it. So with no journal, there's no plan, there's no nothing. You're not even trading. You're just pressing a bunch of numbers and that's it. You don't have your own data set that you can reference yourself off, all right? But the trader who does have a journal knows their win rate, obviously uses their journal and is improving day by day. They know what their returns are, how much money they're making, their win rates, all that useful information, that useful data for you to improve on. They have it, okay? Without having it, you're going nowhere. But when you do have it, you can always be improving. So make sure that you are using a journal. Number 8, understand probabilities, okay? Probabilities, such a big thing in trading. You need to know your probabilities, you need to know your win rates, and then you can go on lose streaks and all that kind of stuff. So no single trade defines your performance, okay? You can't let one trade just tell you that you're a loser, okay? Or that your strategy is no good if you've taken that loss. Your edge plays out over hundreds of trades. Like I think of it as like a minimum of like 100, 200, almost even maybe 300 trades in your journal, whether that's back testing or whether that's live trading or demo trading. You need to have that data so you can always look back at it and you can understand your own probability. So then You know that you take a lot of trades, and you know at this point here, okay, I know that I go through losing streaks. I know that with my 30 or 35% win rate strategy, I know I go through losing streaks, but I know there'll be a time where I'm also profitable, right? Where I'm actually making money. I'm actually making returns. Okay, so this is one thing you do need to understand. You need to understand what is my expected or average win streak. What is my expected or average loss streak? Okay, or max drawdown from the peak of your equity curve. Okay, these kind of things you do need to know, and these are all the probabilities that you need to know. Define risk on every trade means no single loss can ruin you. So um, as long as you're trading pretty much the same amount of risk, like you're not trading 5% risk on one thing and then 1% risk on the other, the probabilities are all stuffed up. If you're trading the same amount of risk, um, then the probabilities are like they're correct. They're useful data. Okay, you can obviously change your risk if you need to once a year or whatever it might be. Uh, don't change the risk amount on each individual trade. That's a big no-no. And then trust the system, not the outcome. You've built this system, you built the journal, you've got the data. So trust that data and trust that system. Okay, don't trust the outcome of a singular trade. All right. Now in this diagram, we've got what is an equity curve, right? So you can see here the equity curve is positive, it's trending upwards. But there are times where it's trending downwards. See, we got trending down here, or it's not really made any moves. Like it's just sort of stagnant, right? Here we've got a zoomed in version of one small part of that equity curve. So you might have a winner, then three losers, a winner, loser, winner, loser. And it's a bit messy and it's all over the place. And you think, oh my God, is this strategy really for me? Are the probabilities in my favor? It's really not working. These past 10 trades have been crap. But then you zoom out and you see the bigger picture and you see that, oh, wait, my equity curve from the start of the year, it actually was growing. I just had 2 bad months. But from the start of the year to now, I've actually made 20%, right? So you need to understand the probabilities and the loss streaks you can go through, okay? So understand your probabilities. Number 9, the trading flywheel, okay? Small consistent actions compound into unbreakable habits, okay? Consistency in trading is probably top 3 skills that you need to have, okay? These small consistent actions, they'll compound into um, profitable and professional trader habits, right? Each rule, it reinforces the next. Skip one and the whole wheel starts to slow down, right? Pretty much what I'm trying to say here is that you need every component, right? You need the consistency, the discipline, patience, the strategy itself, right? These things all are all connected together, okay? If you don't have the discipline, it won't work. If you don't have the consistency, if you're not even checking the charts, you're checking the charts once every 2 days, it's not going to work. If you don't have the patience, you're over trading, right? You're going to lose your money. It's not going to work. You don't understand your strategy or anything like that, it's not going to work. You can even put journal in here, right? If you don't have a journal, then like you're not being consistent, you're not disciplined, and it's all going to stuff up, okay? So um, you need to be building these habits for you to become a profitable and successful trader, right? You need to be consistent. Consistency, it's not the motivation that you get. It's not that when you wake up in the morning and you actually do feel ready to trade, right? Consistency and discipline is knowing that no matter how you feel in the morning, you do need to still trade and you do need to still get to work, right? And it is momentum that is built over time, okay? So you're starting out correctly. You're focusing on your actual process, right? You're starting out on your foundations, the basics of trading. You know what you're doing right. You've got the discipline. You know that you have to spend an hour a day working on trading stuff or trading in general or looking at trading YouTubes or listening to your mentor or their YouTube videos and stuff like that. You review your own journal, your own trades, your own demo trades, your own funded accounts if you've got funded accounts, and then consistency, right? So then from these 4 onwards, so once you start out correctly, these 4 onwards, they keep on turning. So you're focusing on your processes and your systems. You're disciplined about it. You're reviewing where you can improve on and what you're doing well. You're being consistent about it. You're consistently doing it. And it continues going round and round and round. Right? This happens when you're not profitable, when you are profitable, when you're funded 5, 6 figures or whatever, when you've got personal capital only, this trading flywheel, if you stop with any of the consistent habits that you need and the consistent actions that you need, you'll struggle to stay a consistently profitable trader. Okay.